Can you hear me now?
Yes, can hear
Oh,
you.
beautiful. I don't know what happened there, but that will be okay. Tim, there we go. Oh, I like that shirt, my friend. Are you traveling? Because it's raining here in San Diego and it's sunny inside all the time. You're muted.
There we go. Yeah, it's always sunny here. It always shines here in La Mesa.
Yeah, so it must be nice out there.
It
Uh,
is.
that's what
It's
happens.
raining. It's raining here too.
Yeah.
Nice though, because the rain fills up my pool, then I don't have to buy water. So that's good.
Hey, there we go. Beautiful. Awesome. Well, everybody, I'm excited to have everyone on the call today. As you know, with our vision, or if you're newer to the car, all of our vision is really to help other people make $1 billion. We do that through teaching about real estate investing through syndications and funds and other opportunities. We have our investor club community, and with that $1 billion, I always like to have a formula. I think that a lot of people talk about financial freedom or different dynamics of that, but we want to actually facilitate a formula to that. And so, for us to be able to get to our goals, we want to help 200 people get to a net worth of $5 million. And through different growth and investment opportunities, we have formulas to do that. So each week on the call where we talk about different things that have to pertain to legacy wealth. And one of the differences I like to talk about is there's a difference between generational wealth, which is strictly financial, as the way that we talk about it and I talk about it, where legacy wealth is not only financial, but it's the wisdom, it's the values, it's something that can be passed down from generation to generation. And it's the way that family offices look at the transfer of wealth between multiple generations. So, um, what we are going to talk about today is first reiterating some of the um, different types of investing that we do and going through that, and then also comparing that to some of the investments. Keegan's note taker, thank you, my friend, always here. Uh, so, and giving some of the examples there. So, one thing that we talk about is having a diversified portfolio. I think everyone has heard that term before, and um, until I had my uncle who taught me about real estate investing through syndications and funds, I thought of real estate investing as buying a house or buying an apartment, and then I needed to invest in stocks, bonds, and index funds. But there's so many more opportunities out there. And so one of the powerful way that we have found and what we connect a lot of our community with is real estate funds. So these are private equity real estate, and through the fund structure, which to go through it quickly is where you have a general partner and a limited partner. The general partner is the person who is actually facilitating the deal, and they're the one going out and they have the ownership of what the opportunity is. Whether that be a land entitlement opportunity in Florida, we have one of those coming up, or a development deal in Lemon Grove, or even luxury homes in Salt Lake City. Each of the general partners, whoever is facilitating, they're the ones owning the investment, and then the limited partner, we get a part of the equity and the cash flow. So we invest normally 100,000 minimum. Sometimes it can be lower than that, and we get a preferred return, and then a profit split is normally how the structure of those work. Um, so what we're going to talk about today is just the difference of, because a lot of people are like, okay, well, I would like to be in real estate investing, or I want to have passive income, but the only thing I know is investing in the market. And whether you have funds with a financial advisor or prefer to manage your portfolios yourself, either of those are just different strategies within that to be able to have your money work for you. So, and we want to look at some of the comparisons between a real estate syndication or even a business acquisition syndication and the S&P 500, which is normally a great asset to be able to invest in. But what we looked at is over the last 5 years, what the average return of the S&P 500 was, and the average return is 16.06%. So it's about what you hear a lot of times. You think the number that's given is 15%. I think over the last 15 to 20 years. But then you do have years like 2022 where it was down 18%. 18.11 was what it was in 2022. So one of the dynamics that we look at when we're investing in um, real estate is what are the returns compared to the market? Because you're like, what's going to have my money work for me, but then also what's going to diversify what I'm doing. So when it comes to investing in the S&P 500 or stocks, you're investing mostly in the equity growth of a company versus a real estate syndication or a fund is the equity, you have an equity piece in it, but then also the cash flow of it. A comparable asset would be what's called a dividend stock. So a dividend stock, but usually they're not the same in terms of they're not paying out 8%, but there are certain dividend stocks that do well in that aspect. So what we did is we put together some of the returns and what that looks like for two of our different growth opportunities, and what that compared to with the S&P 500, um, to be able to see how do we get to that number that we talked about, which is a $5 million net worth. So what I'm going to do is I'm going to show just the breakdown of what we created here to see what it looks like to invest in a growth opportunity and what the returns are on that, and then compare that to say that 16.6% we talked about, and that's the average of the last 5 years, and then also that knowing that hey, there are years that it goes down. So um what I'm going to show is two different opportunities. Let's see, right there. So these are two different opportunities that we pro forma'd out that show what the future value of what $100,000 investment would be with a 34.7% return and a 33% return. So a lot of our growth investments are 25% up. Each of them have a different time period of what they're looking at for when you have return of capital and when you have access to it. So some of them are more semi-liquid. Some are, wouldn't call it illiquid, but sometimes it's 3 to 5 years. Just depends on the opportunity there. So what we look at is if you initially invest 100,000, what does that grow to in 10 years? So you can see that just that 100,000 can grow in 10 years to 1.9 million. But the compounding impact of if we're able to continue to put another 50,000 each year, that's what gets you closer to that 5 million, which is our goal, to be able to help facilitate other people being able to do that. Because then if you continue the returns of 34.7%, I mean, I think all of us would be pretty happy with 98,000 monthly income. Where if you were put in an initial 100 and then added 100 each year for 5 to 10 years, you can see some of the increased returns that you're able to have there. So that compared to the S&P 500, which I believe to be a great opportunity and way to diversify your income. But it's not the only way. So having that paired with the S&P 500 is a great way to kind of, instead of trying to pick stocks and be Warren Buffett, to just um, invest in the market overall, and then also diversify with real estate, private real estate equity opportunities and business acquisition opportunities with that. So let me pull this back up. I'm here. And so some of the dynamics with the stock market is it can be volatile, like we talked about when 2022 there was overall 18% drop. So in real estate there are ups and downs as well, but the positive dynamic is it is tied to a physical asset. I mean, you see 2008, so there's always corrections or different things that can happen. But when it's tied to something that is a physical asset, there is a different type of risk that is related to it. Um, with that, and so there's some lower volatility there. You can see the higher returns, and then there's also the tax benefits to real estate versus the S&P 500 there. But also depends on where you're investing in it. Some people will use investments within their 401k, within a self-directed IRA, and invest in stocks or invest in real estate. So some of those tax implications depend on where you're actually putting those investments and how you're able to um, allocate each of those. So those are just a general overview of some of the dynamics that we look at when we're looking at a diversified portfolio of looking at stock investing versus um, private equity real estate or private real estate deals through funds. Um, One of the questions that I was asked is uh, what is my investment strategy there? I like to have I do most of my stock investing through some of the retirement accounts versus having that um, within, so it's more of a long term there. So I'm not some people prefer to trade, like I know there are people who are day traders and like to be a part of that. But for me, I'm all about I partner with people who are smarter than me. I'm not a day trader. So my strategy is always, like I say, I'm a fund guy, which a fund is just partnering my funds, my um, capital with somebody else's expertise. So I do the same thing in the stock market. I do the same thing in um, with real estate funds. I do the same thing with private equity business acquisition. So each of those, I use that same strategy. So instead of trying to be a jack, um, know everything, I would rather just know that I'd rather partner with people who know a specific niche. I found that to be the best opportunity there. Um, so let's see, tax benefits to real estate investing versus investing in funds, or I mean, investing in the stock market. You do get a K1 when you invest in a real estate fund. So if it is a development deal, you can actually have that so that you are able to offset some of the tax burden. But then you do have, with the growth investments, so depending on the structure of those, you then get those funds back, and that'll be uh, income coming in. So also some of that structure will depend on if you have it, hey, did I invest under Daniel or invest under Daniel Hack Trust, which is in my self-directed IRA. So let's see. Yeah, so my current investment strategy, I'm much more, I was just talking to an investor yesterday. He's like, I don't really like the stock market. I prefer real estate. He's an active investor as well as a what I call an LP or a passive investor. So it just depends on each person. So I prefer real estate as well. I like to have my hands in everything. So I have about 10% of my portfolio in stocks and index funds, mostly within the retirement space. Um, but I mainly am in what I like cash flowing assets to have passive income. Some of them in income, some of them in growth are the two different that I have mainly in, and then some in the hybrid, which is in the middle ground between those two. So I did want to open it up if anybody has any questions. Let's see, somebody just put into the chat. That was Keegan's AI. Anybody have any questions about either the real estate funds, what their strategy is? It's all about rising tides lift all ships and being able to have a conversation here. All right. Let's see. I went over the tax benefits. I talked about the percentage allocation. So those are the main things. I know today's was a little bit of a shorter call, but we want to be able to always provide value and look at what different asset classes are out there and how we compare them to each other. So I appreciate everybody for jumping on, looking at how can my money work for me from the real estate private equity real estate standpoint or the S&P 500, or there are other um, ways to be able to invest in stocks that that are outside of the S&P 500, whether you have a financial advisor or somebody else managing that to get those returns. So appreciate you guys. Next week, we are going to have Joy Dow on talking about, she is a financial advisor. She's also going to talk about investing through life insurance. It is something that some people will utilize as an investment vehicle. And there are some different tax dynamics to that, as well as opportunities that a lot of people aren't familiar with. So she'll be talking about that. So excited for that call next week. So I hope everybody makes it a great day. Remember, we do have the opportunity to go out and be the light for other people, and we really want to help to facilitate, like we said, other people to make $1 billion so that you can live a life of passion and purpose, and not have to worry about the finances and have your money working for you. So appreciate you guys' time. Great to see some faces. Sean, great to see your face. And I will talk to you guys soon.
Thanks, Daniel.
Thanks, Daniel.
Thank you.